KOSPI slides 4.91%. Semiconductor concentration trips a circuit breaker. Enjoy the cute smile of our little Lauren character while you can, because honestly, the reality of today's Asian markets is just an absolute bloodbath. We literally just witnessed a historic, highly concentrated market breakdown. Let's dive right into this explainer and see what actually happened.
Okay, looking at the real-time fallout, it's a literal sea of red. The KOSPI completely cratered today, closing down 4.91%. And it was basically dragged into the abyss by its absolute heavyweights. Samsung Electronics plunged almost 7%, and SK Hynix dropped right alongside it, down over 6%.
But you know what? Those closing numbers don't even begin to tell the full story. At exactly 1:51 p.m. today, the index plunged a terrifying 8.07% intraday. We were teetering right on the absolute edge of a total market collapse. And that catastrophic drop triggered something you really do not see every day: a stage 1 circuit breaker. The exchange violently pulled the plug. They halted all stock trading across the board for 20 agonizing minutes. To trigger that, you need an 8% drop held for a full minute to shut down an entire national stock market. It's wild. The sheer volume of this sell-off was just staggering. We're talking 2.46 trillion Korean won in non-arbitrage program selling. That is a massive wall of institutional selling pressure hammering the market. So what exactly lit the fuse here? Let's rewind exactly one day. The spark actually came from a pretty blunt assessment by Morgan Stanley's Michael Wilson. He set the tone for the market by declaring that chip earnings momentum has officially passed its peak. What's truly fascinating is the specific rotation Morgan Stanley recommended. They explicitly told investors, hey, cut your exposure to memory chip makers like Samsung, SK Hynix, and Micron. And where should that money go? Straight into AI hyperscalers like Meta, because their core business fundamentals are just looking way stronger in the current AI ecosystem. Which brings us to a massive mind-bending paradox. Right before the market opened, Samsung reported its second quarter preliminary results. Their operating profit exploded upward by an incredible 1,810% year-over-year. That's 89.4 trillion won. You look at the physical reality of Samsung's cutting-edge HBM3 hardware, or their massive sprawling corporate empire in Suwon, and it projects absolute strength, right? But the market, they completely ignored that massive headline number. So why the huge disconnect? Well, yes, the profit beat the 85 trillion won consensus expectation. But it was driven by price hikes in DRAM and NAND, not by higher shipment volumes. And in the semiconductor industry, that's a dangerous late-cycle flashing red light. It's signaling that prices are peaking just before supply finally catches up with demand. So Morgan Stanley's warning was instantly validated in the eyes of the market. All right, let's pivot sharply to the second domino in our forensic breakdown here, the other massive index titan, SK Hynix. On July 6, SK Hynix opened book building for a massive NASDAQ ADR offering. And the size of this deal? A colossal 45 trillion won. That's nearly 29 billion US dollars. Just an astronomical figure. Now that translates to roughly a 2.5% expansion of their total shares outstanding. And in the Korean market, introducing that kind of new share supply injected immediate, terrifying dilution fear straight into the veins of existing holders. And this triggered a wild geographic divergence. It is the exact same news, but it got completely opposite reactions. In the US, early investor demand for this ADR signaled confidence in memory chips, which actually pumped up Micron and AMD. But over in Korea, pure dilution panic. SK Square, whose primary asset is its stake in SK Hynix, got absolutely hammered. They dropped over 9%. But hold on, there's a hidden structural multiplier at work here. While institutions as a whole sold a net 309.2 billion won today, a very specific subgroup, institutional trust accounts, aggressively net sold an astonishing 882.6 billion won all on their own. And here is exactly where the concentration risk becomes fatal. Look at this. Over 75% of that massive trust selling was laser-focused on just two companies, Samsung Electronics and SK Hynix. Now, they represent about 63.5% of the total market trading value, but they absorbed over 3/4 of this trust selling. That is wildly disproportionate. So, why were these trust accounts selling so aggressively? Meet the mechanical culprit operating in the background: leveraged ETF rebalancing. Simply put, when an underlying stock falls,
A leveraged fund tracking it is mathematically forced to sell its shares just to maintain its daily leverage ratio. This creates a vicious, self-fulfilling structural doom loop. Check it out. The price drops, the leverage ratio breaks, the ETF is forced to blindly sell, which then drives the price down even further. This mechanical loop is exactly what turned a bad morning into a full-blown afternoon circuit breaker. So where does all this leave the retail investor? Well, the answer lies in a single staggering figure, 118 trillion won. The data shows a massive 19 trillion won evaporation in retail brokerage deposits in just over a week. They dropped from 137 trillion on June 24th straight down to 118 trillion by July 3rd. Retail buying power was already severely exhausted heading into today's crash. Yet, right here at the physical epicenter of Korean finance in Yeouido, the data reveals something totally fascinating. Despite the absolute carnage, and despite margin loan balances sitting at nearly 38 trillion won, retail investors still somehow managed to net buy over 3 trillion won today. Which leaves us with the ultimate unseen conflict of the day. Because the current data can't definitively separate the two patterns, we really have to ask, did retail investors just catch a falling knife in a late-cycle semiconductor unwinding? Or did they opportunistically buy the bottom of a forced ETF-driven panic? That right there is the trillion-won question. As the dust settles, will this be remembered as a catastrophic warning for the global semiconductor cycle, or literally the ultimate generational buying opportunity? To get the answers and receive news on Asian stock market closings before New York opens, make sure to subscribe.